Today's video is on Tesla. After its earnings report, we're buying more TSLY. It's the Yieldmax covered call fund that yields 60% dividends. It contributes to our yearly dividends here of about $107,000 per year. TSLY. So we're going to go in and check out what's been happening with TSLY. We're down $1,500 today with the overall market. We're down 0.26%. That's what's important, whereas the overall market is down 0.38 for the S&P, the NASDAQ is down 0.41, and the Dow is down 0.15. So we're beating most of the market today, regardless of Tesla's earnings report. Tesla is in OARK, ARK, which is our other Yieldmax cover call fund. Yields a 40% dividend, roughly, and this is down as a result of Tesla's negative earnings announcement. All I did here for OARK was rebalance. I was down about, as you can see, $300. So I bought, about $500 of OARK. So I kept the position at 15 because all these other positions are at 15. I then went down to TSLY and added. I was down about $500 in it. As you can see, 600 here. So I added $500 to TSLY. Simple enough. I was down to 4,500 in the position roughly, so I added 500. So I added 500 to OARK, added 500 to TSLY. I just keep rebalancing as we go lower. And then Aptly I didn't touch, obviously. That's the last of our Yieldmax funds. Aptly, TSLY, and OARK. Until they do the other funds, the other stocks, like Berkshire Hathaway and those others that we've discussed. These are the three that they have so far, and I'm holding them. And we're just, for the purpose of this video, we're going to talk about these. Usually we talk about all these other high quality funds, 4-star funds. Made tons of videos. That's where most of our money comes from. But these are interesting, these new Yieldmax funds that have these exorbitant dividends. So I want to cover them because, as you can see, also TSLY is down with Tesla about the same amount. So Tesla is down 7% and TSLY is down 7%, roughly. So, what does that mean? Well, our shorts, I sold this morning, and then I have since rebought, and I had 500 in the short. Now I've added 500 more. So I have 1,000 in the short, not because I'm bearish on Tesla, but just because I feel like it's a better proportion to have to my position. 5,000 long, 1,000 short. And then our long position, 5,000, even though we're down in the stock in the position currently down $600, we're down 10%. Well, the dividend is 60%. So in my mind, if I'm holding for a year, that's still a 50% gain. So I have all of this yield cushion to go before I'm actually down in the position. And then also, if the stock keeps falling, I should benefit in the short. I made about $50 this morning, no big deal. But if you can be down $500 in a day in Tesla, but be up $100 in a day in your put, that's a decent hedge because you don't want it to hurt you in the other direction. So that's a decent hedge, and then your dividends pay back the rest of the losses. So let's go into a chart of TSLY so we can see what's happening with Tesla today. And again, it's not pretty. The stock's down 7%. This fund is down 7%. The dividend's currently 74%. Not sure if that's completely accurate. You have to do the math yourself. It should fall somewhere in line between, 60 and 80. Again, I have to do the math every time. I don't feel like doing it right now. So in order to get a good look at Tesla, we have to go to Tesla stock, and we'll see here that yes, the stock's down 8%. So, by the way, I think that means that if I remember the price that I just saw for Tesla, 7.5%. Tesla is slightly outperforming, which is nice. But really, that's about the same. And, 7% or so and 8%, that's, to me, that's negligible, the difference. And that's kind of scary when you're holding a large position like this in Tesla. So that's why I'm keeping it at 5, because I wanted to see how this thing works when the stock moves lower in a significant way. Now the stock's down 8%. And, now we have to look at first the chart. So we're going into the chart, and to me, we're near support. 165 was the last support if you look at this candle. So 163 was that low, 163. And we're currently around that area. And I could see us then hitting 150 if this support breaks. And I'm kind of already preparing for 150 because we hit 100 here in 2023, and then we hit 200, and that was a 100% move in such a short amount of time that a 50% retracement is completely realistic. And that's usually what happens after such a move anyway. So 50% retracement. Again, that's when you would own covered calls, though, because if you own Tesla and you don't want to sell for the tax implications and you had a huge run, then you sell covered calls. Simple as that. And that's what this fund is. TSLY is a covered call fund. So you're going to lose with the underlying, but you're that's the choice that you made because you didn't want to sell the stock. So now you're just getting the same loss to the downside as you would by owning the stock, but you're collecting this monster dividend to offset the open market pain. So you really have to block out the pain and just think dividends, dividends, dividends. Let's also go into the earnings report of Tesla, and I just want to show you briefly that while they made, I think, what was it, like 22 million in revenue, 22 billion. That was on another headline. This headline shows the net income of 2.5 billion, 2.5 billion net income. To me, that's all that I need to know. They're making money. They're not just losing a lot of money. They're in the S&P. They're in the NASDAQ. Yes, their margins are lower. They're trying to compete with other EV companies and be the Model T of EVs, be the Henry Ford of EVs. I understand that strategy. I respect it. They're also selling a lot of their solar panels. You can see here solar storage was up 360% year over year. So, that's a whole nother growth segment that a lot of people don't mention. They could be like the next utility company, the next big utility company. The other thing I wanted to show you here was that their factories are running in full capacity. They're running at full capacity in Shanghai, which is just nice to know. From COVID shutdowns, it's nice to know that they're actually running at full capacity. And I also want to show you their cash position was 22 billion. So I mean, they still have tons of cash at their disposal, ready to make more, ready to deploy more capex or perhaps make acquisitions, whatever they need to use the cash with. That's a lot of cash. Okay, they can buy back stock, whatever. As you can see here, their competitors were not down as much in sympathy. So I just wanted to show you that they made net income. That's the most important. You can look at revenues for companies. They could be amazing revenues. I'm always looking at the net income. They made a net income. So to me, and again, that's a 2.5 billion in net income. So I think that that's still a positive for the stock, even if they have to lose money in the short term just to beat their competitors. Long term, that's a winning strategy, and that's what a lot of tech companies did when they started out. They would lower prices. Look at Facebook, look at their Instagram. They have not monetized a lot of it like they should because they're trying to just get as much market share as they can. Then they can do monetization. So, if you think about Tesla from a chart perspective, 165 is the support area. That's where we're at now. And then 150 is the next area. I have a hedge in. The dividends are paying back our losses through TSLA. So for us, and then fundamentally, the net income was strong for Tesla. Their other growth business, solar, was strong. The Cybertruck, I have some information on that. Well, really just a couple of pictures. I don't know much about the truck. See, for me, I'm more of an income investor, so I don't care about the specifics of the company. I know I need to know that because I have TSLA, so that's why I'm actually talking about some of the specifics of the company, such as their net income, such as their relations in China, which is important. The geopolitical situation there, that's important to know. We've talked about just the overall theory here of the dividends that TSLA yields to you, which pay back losses. So to me, and that's the most important point, is that we're collecting dividends regardless. The losses, if you have a large position and you see that the stock could fall lower, I do think that this short makes sense. I mean, TSLS, it was up, it's up in line with the stock. So the stock was down 8 and this is up 8. So this is perfect correlation. And then our fund was down 8% or so. So again, 7%. So that's all perfect correlation. I think it makes sense to have it as a hedge. I mean, going 5 for 5, 5 long and 5 short, I don't know about that strategy. I mean, maybe right now as you see Tesla churn and perhaps retrace back to 150, but I'm going to keep the short on for that. I'm thinking out loud, and it does make sense because you're not going to get a whole lot of upside in TSLY. You're going to get 5 to 15% upside. That's what the prospectus says. They sell the calls a little bit out of the money, so you're going to get a little bit of upside exposure, but nothing like the stock would give you if you just own the stock itself. So it does make sense to kind of hedge out the entire position with a TSLS short, maybe go a little bit more short, and then the TSLY long. It makes some sense. You would hate for the worst case scenario to happen, which is the fund drops just because of NAV erosion and implied volatility, but the stock is kind of rising slowly and you're getting burned on your shorts too. That's my big fear. I don't want to have a gradual rise and have too much short and I'm losing on the short. And again, the dividends are falling, so the NAV is eroding on TSLY, and I lose both on TSLY and the open market and on the shorts. Meanwhile, Tesla continues to either stay sideways or grind a little higher. The odds of that happening though are small because Tesla doesn't grind higher. It stair steps and it shoots up either higher or lower. It's much more volatile than stock that grinds. And so the short still would make some sense here, having a little bit more short. But again, I'm just going to let the dividends pay for the investment and stick to my original investment strategy which is what I do with all these funds. I try not to short and get in the way of these things because the dividends really do cash flow the investment over time. I'll have a small amount in TSLS. Maybe I'll add 1,000 more to TSLS to get it up to 2, and now I can really sleep at night and know that this TSLS, this TSLY position shouldn't go against me. But again, I don't want to put too much short on and then TSLY go against me for no reason, and then Tesla move higher. So we have to see a little bit more how TSLY moves before I just go 1 for 1, 5K long TSLY, 5K short TSLS. So I'll think about putting 500 on. If I do, I'll add it in the comment section. So just keep staying with the comments. And I really appreciate all these comments, by the way. I hope my aim of this channel is to make the content more about the comments and not the video itself one day. So anyway, I think that'll conclude this video. Performance and value, let's just show you how we're doing because, with all this volatility, it would be nice to know. And you'll see that we're still up 15% for the year. The Nasdaq's up 15.8, we're up 15.7. The Dow's up 2% and the S&P is up 7%. So we're still beating the market with this strategy. Our estimated income is again around 107,000. I plan to get it to 108,000. Which is a big mark for me because that's from the 96 mark to 108. That's another 1,000 per month. So, that's what I'm always trying to do is increase my monthly income by another 1,000 per month. And my next goal would be 120 because that's 10,000 per month. 10 times 12. So I'm trying to always increase my income, but safely, without adding margin, without adding too much risk. I sold some tech funds today, like my triple longs TQQ, to lower risk and just leave it with OARC because that's we have 15K in OARC now, as I showed you. So I've reduced risk there. I raised a lot of maintenance by doing that. The maintenance here, my available withdrawal, it's not 109. It's actually because I told you I've been taking some loans on. I've brought in about 15K so far, and I plan to bring in another 15K. My available is actually 119. That'll update in a few days. So I'm well above. I have a lot of cushion for a margin call. Let's put it that way. You know, I like to stay above 100,000. Now I'll be well above 100,000. And then with the 15,000 I bring in, I'll be at, again, 130 something thousand available for withdrawal. So I'll be safe there. And so again, you saw the performance of value. OARC, I was just talking about that replaces our TQQs, and it's heavily growth oriented, so that eliminates two of a kind. And I raise a lot of maintenance by doing TQQs because they're 75%. OARC is 50% maintenance, so that took this number up by about 4,000 when I sold TQQ. So that's those are all positives. Again, estimated income is going to rise soon. I plan to raise this estimated income by adding these other Yieldmax funds. So like when the NVIDIA fund comes out, and the Coinbase and the Berkshire Hathaway, all those other funds that are going to come out, that's where I plan to take this income up to about 120. But I have to do it safely. I have to sell these other funds to make room, make way, because you don't want to have two of a kinds or have too much exposure on of one sector or another. So we'll be very careful as we add these next funds that are about to launch. Anyway, I hope you enjoyed the video. That's what I've done for Tesla. Let me know if you would add more to your short strategy, or if there are any other strategies that you're thinking of that would work out for Tesla, and I'll talk to you soon. Thank you.